studios in New York City. This is Charlie Rose.
Warren Buffett is here. He is the chairman and CEO of Berkshire Hathaway. It is a very successful company. It just had one of its most successful years ever. Warren Buffett has been CEO for 42 years. He has become perhaps the most admired investor in the world. We first began a series of conversations in 2004, and they have continued since then as we have talked about his company, his life, his extraordinary gift to the Bill and Melinda Gates Foundation, and how he sees the world. I am pleased to have him here for a continuation of that conversation. Thank you for coming to this table again. We began these conversations in 2004, and then 2005 and 2006, and now 2007. I hope they will continue for a long time.
I hope they will too, Charlie.
This has been a remarkable year since the last time we talked. The largest philanthropic contribution, which we talked about in August in the history. 2, you've been married to a wonderful companion, Astrid Minks. 3, you have had the most extraordinary year in 2006. But most importantly, you're doing and continue to do what you love most, which is running Berkshire.
That's the ultimate luxury in life. I mean, if you can get paid for doing something that you would pay to do, and have the time of your life surrounded by people you love, doing every day what you love doing, I mean, it doesn't get any better than that.
2006 was a great year.
It was a good year, yeah.
Tell me about it.
Well, it just, we made some good acquisitions. Our managers all came through for us. And nothing went wrong. I think that's the best way to put it.
But this is the largest growth, 2006 for you, for Berkshire Hathaway, the largest growth in net worth of any company in the history of American business, except for Exxon, which pays mostly dividends, and some people who grew by acquisition.
Yeah, and there are other people that earn more money, but they pay it out. But in terms of the actual gain in dollar net worth, I think we set the record last year.
People will pay a lot of money to have lunch with you.
If I don't sell it too often.
That's right. There's supply and demand, isn't there?
Yeah, supply and demand.
So what is it they bid up? What's the most expensive lunch that you have been to?
Well, I'm going to leave here and go to a lunch that a fellow's paid $610,000 for, and Smith & Wollensky's paid another $10,000 to give us the lunch. So the charity will get $620,000. This fellow he's Chinese American. He's become an American citizen, and he's bringing, in this case, 7 other people with him, as well as his wife, who's a very talented wife. And we'll talk about whatever's on their mind. But I've enjoyed every one of these lunches.
How many have you done? 20, 25?
I guess about 10 maybe, or something like that. But since we went on eBay, the prices have really escalated in terms of what it brings. This fellow's an interesting fellow because he didn't want to bid earlier because he didn't feel his English was good enough. But this past year he felt good enough, so he paid $610,000, and if he gave eBay a limit of $650,000, he was going to keep topping anybody till the last second. But I've met some very interesting people in the process of doing this, so I get a lot out of it myself.
And I bet you they don't ask you, because you wouldn't tell them specific stuff. What do I invest in?
No.
It is much more about share with me some sense of what the kids are interested in.
Well, I met with one young couple where the guy is a very successful investment manager. He doesn't need to know how to make money, but he wants to know about raising his kids, and because he has a lot of money, and it's a lot of questions, and whatever they want to talk about is fine with me. And the lunches have lasted as long as 3 hours. I'm theirs for as long as they want.
As you have gotten bigger, what are the risks of being big, and what are the downsides of being big, and what are the upsides of being big?
Well, size is the anchor performance. You can't run $100 billion or $200 billion the way you can run $100 million or $1 million. So it's an anchor to performance. When I was running a few $100,000, the whole world was my universe. Any idea, thousands and thousands of companies, any single one of them that was a good idea would have an impact on our net worth. Now that universe has just kept shrinking because if we do something brilliant, with $100 million and we make $100 million on it after taxes, that's $65 million. And in relation to $160 billion, it doesn't move the needle. So I have to look at a very, very large companies, and that means that relatively few companies. That means that all kinds of things that would make sense for me to do if I was running $1 million or $10 million no longer make sense.
The priority is acquisition rather than equity position.
Absolutely. Yeah, I hope we have 73 businesses now, and they go all the way from Dairy Queen and the deli bars, you know, to 737s at NetJets. So we've got a little bit of everything, but I want more of everything. And I would, you know, I hope the 73 becomes a much bigger number. Now, I like buying stocks too, and it's, you know, it's a game I know to some degree. But the real goal at Berkshire is just keep building more and more earning power from operating businesses with terrific managers doing. That means I don't have to do a damn thing. I just sit there in the office and, you know, play my ukulele or whatever.
No, there's more than that.
Well, but the truth is, if you get a good business, you know, it's the gift that keeps giving. I mean, it gets better over the years. And instead of going from flower to flower like you do more in the stock market, you can. If our 73 businesses we have now are very likely to be earning appreciably more money just by themselves 10 years from now. On top of that, we'll add more. And I love doing it. I love the managers that we associate with, and it's a lot of fun.
You are making investments in some companies you were in and out of, Walmart being one.
Yeah. Well, every now and then, I mean, we sell stocks periodically, but the big mistake I made actually was I started out to buy Walmart stock in the mid-'90s. And I was going to buy a significant amount of it, and we would have made probably $8 or $9 billion out of that. And instead, it went up a little bit, and I started sucking my thumb, and I turned a potentially huge profit into a tiny profit. But that's one of the things we don't talk about. That's one of the things we don't talk about.
$10 billion mistake.
A $10 billion mistake.
But you're back in Walmart, is it?
Well, we have a relatively small position in Walmart, but we do have a position.
There was a story, and I think in the Wall Street Journal or somewhere, that there is some huge acquisition that you're thinking about. Now, obviously, you're not going to tell me what it is. Is that a true story?
Well, it's true, but they're always long shots. I mean, there are some companies that would love to come with Berkshire. I just can't make it work in terms of having something that would work in the market and that's sensible for Berkshire shareholders. We have a lot of people that would like to join us, but prices are such, competition for buying businesses is such, that the chances of pulling any one of them off is slim. But if you keep, trying to kiss enough girls, eventually one says yes.
In terms of the resources you have, your capacity to pay is not an issue.
No. Everybody knows our check will clear. We can do big deals. We never we've never made a contract where it says subject to financing. I mean, we're financed. And so when if I shake somebody's hand, they have a deal.
How many emails do you get a week from people who say, Mr. Buffett, I want to sell you my business?
We don't get very many, Charlie, because in the annual report, I lay out our criteria.
Right.
And one of the criteria is a company that earns $75 million pre-tax or greater annually. So I try to filter. I tell people, we're looking, we're looking for St. Bernards and not Chihuahuas. And even though I say that, I hear about a few Chihuahuas. I mean, people can't resist the temptation to say, but I've really got this wonderful little business, and they may have. But I just can't focus on that. So by setting out the criteria clearly, it reduces the flow.
You love newspapers.
I love newspapers.
You love the people who run the Buffalo News.
If I couldn't do what I'm doing, I would like to be in the news business.
You have said that unless it becomes an impossible cash drain, we know that this business will never be as good as it was, but we'll keep it.
That's right. Yeah, I put in the back of the annual report only the two conditions under which we'll sell business. Either that it's going to be an unending cash drain or that we have impossible labor problems someplace. But absent those two conditions, even though we see a diminished future for a business, or even though somebody offers us twice what one of our decent businesses is worth, we have no interest. I mean, it's
when you buy them,
it's a lifetime.
You hold them.
It's a lifetime deal. That isn't what they teach in business school. I mean, in business school they say if somebody offers you 3x for a business that's worth X, that you take it. I mean, and they talk about portfolios of business. They're not portfolios of business.
Yeah, exactly.
Yeah.
They are businesses you own, and you treat them as an owner.
People joined me. They trusted us to put something they'd spent a lifetime building, and they wanted to find a final good home. And we're not going to change that around just because somebody offers a little more money for it.
Very different from some of the private equity firms.
Yeah, well, they're in a different business than we are. Yeah,
they're buying assets and changing assets and selling assets.
They have what they call an exit strategy. We have an entrance strategy, but we don't have an exit strategy.
What do you think of all the talk today? One, Sam Zell wanted to own the Tribune Company.
Right.
He made a lot of money. He sold to Blackstone.
Yeah. And he's crafted a very intelligent deal from his standpoint. How the Tribune turns out is another thing. But you couldn't have the deal set up much better from both a tax standpoint and from a relatively small investment leveraging him into something big. But you still have the Tribune Company to run.
And it's a declining business, as we know.
It's a tough business.
And as you say, people buy newspapers for importance. It makes them important if you own a newspaper.
If you own the Omaha World-Herald, where I live, or you own the Fremont Tribune in Fremont, Nebraska, you are automatically a very important, maybe the most important person in town. I mean, you have instant significance, prominence, and everything that mere money might not have given you. It's like a sports team squared. If you own the Yankees, you're going to be very important in New York City.
Yes, you
but
are.
If you own the New York Times, you'd be even more important.
The Wall Street Journal.
Wall Street Journal is the second most important property in the world in terms of the significance it gives its owner.
First is the New York Times.
Yeah.
What do you think of this effort by Rupert to buy the Wall Street Journal?
Well, I think, it doesn't surprise me at all.
Because he loves newspapers?
He loves newspapers. Plus, the Wall Street Journal and the New York Times may have a somewhat different future in an Internet age than the typical metropolitan daily.
Because of brand name.
And the fact they're national. I mean, their city, if you take, Barney Kilgore came up with this wonderful concept many years ago. I think the Journal had a circulation of 20-some thousand at the time.
He was in the editor or the...
and he had this idea. Every other newspaper divided itself by town. I mean, if you were the Omaha paper, you served Omaha. Philadelphia paper, you served Philadelphia. He conceived of a city that was not defined by geography, but was defined by interest. So he created a new city, and it was national, in terms of where the location was, but it was a city with common interests, and he built the Wall Street Journal to serve that city. And it was a wonderful city, great demographics, all kinds of things. It was a brilliant, brilliant, brilliant idea and well executed. And therefore, you have with the Journal, and you have with the New York Times now, too, you have a paper that transcends any given geographical area, and that may work in some way on the Internet a lot better than trying to do it with a paper in Omaha or Buffalo or Philadelphia or Miami or something of the sort.
The Washington Post, which you're on the board, has not done that.
Well, the Washington Post has done it. The Washington Post is still basically a local paper. I mean, overwhelmingly a circulation there, but their website has gotten real reach beyond Washington. Now, the question is whether you can charge for it, whether you can make the economics good. And the reason you make a lot of money with the Omaha World-Herald is that there's no competitor, and automatically, now you make less money with it today, and you'll probably make less money in the future because there's new forms of competition. But in terms of direct competition, there's no direct competitor. If you on the Internet, I can click from LA Times, New York Times, Wall Street Journal, Buffalo News, Omaha.com. I can go all over, and there's no effort involved in my part. I don't want to go out on my doorstep and collect 8 papers, from around the world and sort them all out. I'm probably the only guy that does. I'd read all 8, but,
yes,
but nobody else will.
No, there's another one. Me. Yes, that's true.
But what gave newspapers their marvelous economics is that they were natural monopolies in most situations. And that monopoly power has decreased. And, of course, the technology is just galloping along. There are a whole generation of people that don't really feel any great need to read a newspaper daily that would have been total addicts back when I was growing up.
If you were the Bancroft family, would you sell?
That's a decision they've got to make. It's an interesting thing because, in a sense, almost every business is just basically our brick business or whatever lemonade stand.
Right.
The value of the business is the cash it's going to produce in the future. Now, when you get to sports teams, movie studios, and particularly something like newspapers, it's the value of the cash it's going to produce plus the significance that comes with it.
Right.
So it's an A plus B. B is big at the Journal. In a sense, the Bancroft family doesn't really get the significance. They may get an inner significance, but everybody knows who George Steinbrenner is when if he owns the Yankees. They don't really know the members of the Bancroft family. So they have an asset that's worth a lot of money to somebody else, not just Rupert Murdoch, but other people. This B factor of significance, power, call it whatever you want. And they can sell it, but they don't really get the value of it themselves. But they've got the tradition of it that was handed down to them by parents or grandparents. They do believe that it's very important. It's a very important national asset, and therefore it is not something to simply be sold based on whether they get X or X plus $2 or something. But there's 35 members or something like that of the family, and you get 35 people in a room, and they're not going to all agree.
Some will peel off.
Well, a few have peeled off.
Right.
The question is whether more peel off, and we don't know the answer to that yet.
If I was a betting man, would you bet against Rupert Murdoch?
Well, nobody's made a lot of money betting against him so far.
That's right. He's made a lot of money betting for him.
Yeah,
so.
no. He is a very smart man to start with, and he knows media, as well as virtually anybody in the world. And I met him back in, I think, 1974. I came up to Kay Graham's apartment just after he'd bought the New York Post, and he hadn't been over here very long. And he talked about both the business side and the editorial side of both newspapers and television. I don't know whether he'd been in the country 6 months, but he knew that better than virtually anybody I knew in the business. And he knew both sides of the game. Yeah. He was a publisher and an editor, or an owner and an editor, and he just, it's his game.
Have you for a moment, because $5 billion is not a whole much in the broad.
No, our check would clear.
Have you thought about it for a moment?
Yeah, I'd say that. I mean, if a girl walks down the street, do you think about it for a moment, Charlie?
More than a moment.
Okay, well, I thought you'd say that.
So would you. What did Churchill say? Just because I'm looking at the menu doesn't mean I'm going to have the meal.
But no, but I would say this. I would say a very significant number of people throughout the world, not just the United States, mostly the United States, who have significant amounts of money would think about it. I don't think it's at all impossible that other people emerge in this situation. I'm not predicting it, but you can't help. It doesn't come along that often. If the New York Yankees came up for sale, would there be more than one person would think about it? Sure. And they'd think about, groups would think about forming all kinds of things. But there's certain, it's like a rare painting coming up to a bunch of art collectors, except you can cube that in terms of this, because this is not, there's lots of famous paintings, but the New York Times and the Wall Street Journal are two properties that won't be created in the future.
Sounds like you're still thinking about it.
Well, it's a spectator sport, if nothing else.
I'm going to let you off with that, but it sounds to me like this is a famous and beautiful painting that you like. And it's in the world that you live in, finance.
Yeah, sure.
And the financial newspapers have been, and financial service companies, those that provide information in finance, have been the most successful.
Well, looking back, of course, it's really interesting what happened. I mean, if you go back 35 years, virtually no area was going to explode like financial information. I mean, the degree of interest in financial information now compared to 30 years ago has increased at far greater rate than sports or political anything. I mean, it's just exploded, and it's something you can charge for. Dow Jones owned that world back in 1970. I mean, they owned the world, and not just the Journal, but even the Dow Jones news ticker. I walked into Walter Annenberg's house in 1977, and he had the Dow Jones news ticker there. That was how you got financial news. And here we are, and Rupert is talking about $5 billion for that.
Exactly.
Bloomberg is worth $20 billion or more.
Plus, yeah.
Starting from scratch many years later. It was a superb franchise in a fantastic field, and frankly, they blew it, in terms of, now, they didn't blow it in terms of the Wall Street Journal not being important or anything.
Right.
But
or a good paper.
No, not at all. But in terms as a business, having the audience, the franchise, everything they commanded, they owned the field, and they let other people take it away from them. And they didn't let them take the journal itself away from them, but in terms of the monetizing the asset with which they started, the trust of investors and every business throughout the country, and people didn't think of anything else. That to monetize that, it could have been a company that was worth $50 billion now instead of $5 billion.
It's incredible.
Yeah.
What's interesting about this is when something like that comes up that interests you, that's a great painting, I don't care where it is and what it is, you can take a look at it knowing that if it works for me, I can have a slice at it.
That's probably true.
That must bring you some sense of challenge, excitement.
Yeah, you got to be sure it doesn't bring you too much of that, though. You can do pretty dumb things if you got a big checkbook, and you get captivated by an asset. No, in the end, I'm working for our shareholders.
I know you are, but in fact, you're now looking for a successor on the investment side. You
Absolutely.
have decided, as you think about succession, that there are three people who could be the CEO.
Absolutely.
And those names are known to the board of directors or the executive committee or somebody.
Yeah.
And you have chosen who, if something happened to you today, would be the next CEO of Berkshire, correct?
The entire board has chosen. And we met Monday and we reaffirmed it.
Reaffirmed. So it could change a year from now because you make a different decision because of intervening events.
A person could become injured.
Here's what's interesting. You now have announced that you're going to look for someone who is going to be your successor as the investment guru. One of the criteria is they understand risk.
They got it.
And not going to risk the entire thing that you've spent your lifetime building. Talk about that.
Well, I have seen all kinds of people with 160 IQs with intense interest in the subject, lots of experience in the investment world. I've seen them self-destruct. And you have to have a certain amount of natural flow of users just to be excited about the game and down there participating. And the trick, of course, is to keep control of those users. And most people, even very smart people, have trouble not getting caught up in the game and thinking, I'll just dance one more dance, like Cinderella at 5 minutes to 12 or something like that, because they think they're smarter than the rest of the public, and that even though they know it'll end, they'll get out a little sooner. Or they don't protect themselves against something that'll come totally from right field. I mean, long-term capital management was a good example of that. So I'm very conscious of never turning investments at Berkshire over to someone that I think might have this tiny fatal flaw, make all kinds of money most years. But if you take the numbers, 28, we'll talk percentages, 28 times 33 times 17 times 22 times 0, the answer is 0. You can't have a 0 in there. And I've seen a lot of people that have put up a lot of good numbers, and then they stuck a 0 in there, and it was over. It's over, and you go back to go. And I want someone not only that can see the known risks, the ones that they've seen before, but can even see around the corner on the ones that haven't happened yet. I mean, when I have the classes out to Omaha to talk to, I ask them, and these are bright kids, really bright.
Let me just explain that for a moment. You've had, in the 2006-2007 school year, 35 universities have come to Omaha for lunch at Garage with you.
I spent about 5 hours with them.
Including Brazil as well.
Brazil.
Tell me what you were going to say and what this dialogue is about and why it's important to you.
Well, I've usually got 150 or so sitting in the class. And, these are MBAs, and they're interested in finance. And I'll ask them how many have heard of the Northern Pacific Corner. And usually no hands go up at all. Well, one of the things I did when I was 10 or 11 years old, I read every bit of financial history I could, because it isn't just about the figures on the chart last week. It's how human beings behave. I talked to Alan Greenspan one time about the Northern Pacific Corner. He knew all about the Northern Pacific Corner. But you have to be aware of the fact that human beings can do things that just blow your mind. I mean, think of what Hitler did in Germany. I mean, there's just the scope of human beings to do crazy things, self-destructive things that as a mob they do. I mean, you saw it on October 19th, 1987, you saw 22% of the market value. Something happened to change.
Market crash of 87.
22% one day. You saw, long-term. You've seen all kinds of things. There'll be other things in the future. They'll have similar factors. The human factor will be at the bottom of them, but they won't be exactly the same. But it's like Mark Twain said, history doesn't repeat itself, but it rhymes. And we will see some things that rhyme, with 1929 or with whatever it may be. And I have to have somebody in the position who can think about those things and never get exposed to getting crushed by the herd.
This is so crucial that what you're going to do, as I understand it, you're going to select 3 or 4 or more. You're going to give them $1 or $2 billion and watch them. How will you measure, beyond this performance, as you take a look at this, whether they have the quality you just described?
Yeah. And I'll look, incidentally, at what they've done for themselves for the previous 10 years. I mean, I can tell much more by looking at how they've swung at each ball over the year than having them hand me some score at the end of the time. So,
Exactly.
So it won't just be their performance, but it will be how they achieve that performance. And I can read a lot into that. Now, I've done this twice before in my life, Charlie. I mean, when I got out of my partnership, I picked 3 people, actually, and one of them was the one that most went with. And all 3 of those turned out to be 37 years later. All 3 of those were good choices, not because they just managed money well, but they didn't self-destruct either. And I picked one for Geico at one time. So it's not impossible. It's more difficult for me now because I'm not a contemporary of these people, and I don't know the crew of the 40 or 50-year-olds like I knew it when I myself was 40 or 50.
Yeah. You've got a guy. You're looking for somebody who's in their early 40s, probably.
But they could be 35. They could be 50.
Okay,
they can't be 76 because I know a 76-year-old
who likes doing it.
Who likes his job.
Yes, you know about it. Plus, you've got Lou Simpson, who's great.
Oh, sure,
and could do it, but he's closer to you than he is to 40.
But Charlie's 83.
But
he's going good.
But he doesn't know it.
He doesn't know it. Yeah.
In the annual report, letter to the stockholders as well, you once again talk about the trade deficit, what they call the current account deficit. It is one reason that you believe that the dollar will continue to decline.
Right.
Talk about that. I mean, we are, in a sense, giving up our assets in order to feed our spending habits.
Exactly. And it's a drip, drip, drip kind of thing. So, it's like sitting down at a table and having one extra piece of toast every day compared to your normal diet, and you don't all of a sudden get up and everybody says after the one, and they say, "My God, you look fat. You better give up that piece of toast." But if you keep taking in a couple hundred calories more than you're burning, every day over a long period of time, you wake up someday and you find out you're in the kind of shape you wish you hadn't been in. And we're the richest country in the world. We've got lots of assets to trade. The rest of the world's happy to take them. They're happy to take our IOUs. They're not quite as happy as they used to be, which is why you've seen a declining dollar. And we are not going to shake the habit of consuming more than we produce. And it's a very tough problem in a democracy. It's about $2 billion a day.
Think about what you just said. I mean, if in the end we can wake up one day in a terrible place, then you just said we're not likely to shake the habit. This is a forecast for doom.
Well, it isn't doom.
What is it then, if in fact...
Well, it's just a forecast for transferring a good bit of the ownership of your country
to other places.
To other places, and then your children and your grandchildren essentially having to spend some of the time that they work every day, every week, to service the debts that you incurred a long time earlier. If it's just a budget deficit in the United States, the debt you paid becomes the other guy's income. But when you're actually transferring to the rest of the world, now you live less well than you would otherwise.
In addition to that, to pay the cost of servicing that.
That's right.
The companies are going to shift production overseas.
Well, it's hard to tell all the ramifications, but the one thing that's happened is that we always have owned more of the rest of the world than the world has owned of us. And since 1915, almost 100 years ago, they've always paid us more because we've owned these assets there than we've had to pay them. That has just turned, and then it will start growing.
In 2006, it turned negative.
It turned negative, and it will get more negative. Yeah, in effect, we have been somebody with a savings account we've used up our savings account to consume, and now we're using our credit card. And the interest charges haven't gotten big on the credit card yet. But if we keep using our credit card long enough, we start paying vigorish on vigorish, and after a while that you start noticing it. But it happens slowly. And anything that happens slowly that's negative for the long-term consequences in a democracy is very tough for government to attack.
Two things that I assume, I don't know this, that if most Democrats come to you looking for your support and your ideas.
And money.
Yeah, that's what I mean by support.
I know. That's what they mean by support, too.
That's what they mean.
We like your support, Ward, yeah.
Exactly. And this is the number we have in mind.
Right. Third reminder.
Two things you want to talk about. One is a trade deficit with them, I assume, to develop some sense of urgency on the part of political people. The other thing I assume you want to talk to them about is the estate tax.
Yeah,
or what else?
I would want to talk about weapons of mass destruction.
Sure, of course.
Yeah.
What would you say to them about weapons of mass destruction?
Well, I mean, in the last presidential campaign, both candidates, you may remember one of those debates there asked what the most important question was, and that's it. But it's tough to tackle, Charlie. I mean, I'm sympathetic to some extent. Yeah. It is the most important. But our economy over time will do fine. I will guarantee you that your children or grandchildren will live better than you live, if they live at all. I mean, that's the real question. And you know, there are very significant number of people, organizations, and even a few countries in the world that wish us evil. And their capacity to inflict damage on us because of the fact they wish us evil is manyfold what it would have been 50 years ago. And you know, we have to be terribly conscious of that.
Okay, but what would you have political leadership do that they may not be doing?
We've got non-Lugar, for example, in terms of working with the Russians. But
in terms of making sure their weapons don't get out of control.
Absolutely. I mean, there's a lot. There's a lot of material around the world that might be susceptible to the wrong people getting their hands on it. And it extends beyond, you know, the biological.
It's the ultimate fear. Yeah. The ultimate fear is a convergence of a terrorist with a nuclear weapon.
Absolutely. Or with a biological weapon.
Or a chemical weapon.
Sure.
Yeah. Have you chosen a candidate in the 2008 political race?
I have two candidates that I would love to have either one of them be president of the United States, and that's Hillary Clinton and Barack Obama. And I think that they both would make terrific presidents.
Prefer one over the other?
No, I don't want to turn my back on either one of them and turning toward the other. But I think they both would lead us to a better America. I think we got a pretty good America already.
Yeah, which has been very good to you. As you constantly say, there is this thing called the ovarian lottery, and you benefited.
It's a wonderful America, but it now has reached a point. Well, it's always been we could do better, but we can do better than we're doing in terms of taking care of 300 million people instead of taking care of just guys like me.
And you have a belief that they will do that. They have ideas and programs, intelligence and energy to do that.
And leadership abilities. You have to get people behind you. You have to get people to aspire to things that they haven't really thought about too much before. And I think both of them would be great leaders.
There is this also. I mean, this country's been so great to you, and you make note of that all the time. Part of the reason you could do what you have been able to do is you were born in this country. Yep. You came at the right time. You had parents who gave you the right values. All of those things.
Stick me down in Afghanistan. You know, I walk down the street saying I allocate capital. They say, "Buddy, get a job."
But look at this circumstance as well. You did better in investing in the South Korean stock market than you did in the American stock market. Now, I don't know what that says, but it must say something.
Well, it just means South Korea was cheap. It really means that South Korea went through something in 1997 and 98 where people sort of wrote it off. They got in trouble, and the IMF came in and all. And so people formed an idea of South Korea in 2002 that was based on 1997 and 8, which was long past. The market has this habit of looking in the rearview mirror instead of outside through the windshield, and they were looking at South Korea in the rearview mirror when the windshield, you know, was bright, but that didn't mean that South Korea was a better place to start a business or to live or anything else. Although you know they've done very well.
You like the South Koreans,
yeah, but but their stocks were very, very, very cheap. They were ridiculously cheap a few years ago, and our stocks were somewhat cheaper than they are now, but they weren't nothing like the low valuations of South Korean stocks a few years back.
You are, it is fair to say today, looking more overseas than you ever have before?
Yeah, I've always looked overseas, but we're looking more. That's true.
In part because of what you don't bet you don't bet against the currency by currency trading anymore. You bet against currency by making investments in international companies, or B, by buying, as you did in ISCAR, international companies.
International earnings. Now, we still have more in the United States. We'll always have more in the United States than any place in the world. I mean, we have all these businesses. Most of earn most of their money in the United States. But we are developing more earning power, both direct through a company like ISCAR,
right,
and indirect, which we've always had in a Coca-Cola, but
sure,
Procter & Gamble, things like that.
Whose markets are extensive around the world.
Around the world. And they will, with most of those companies, their international earnings will grow faster than their domestic earnings. And then on top of that, they will probably get some currency kick over the years. It's not an overwhelming factor with me, but it's something that I consider.
Why did you made $2.2 billion in currency trading? Why did you stop doing that?
Because interest rate changes made it so that there was a negative carry to most currency trades rather than a positive carry. And therefore, previously, if the currency stayed at the same price, I would make a few $100 million a year. Now, if the currency stayed at the same price, I'd lose a couple $100 million a year. So the carry went negative. I don't want to get too technical on it, but it made it more expensive to own those currency positions in that manner. And instead, I just decided that it was a better way to attack it was to have foreign earnings directly in other currencies, and there I've got a positive carry.
Right. One of the investments you have is PetroChina.
Right.
$3.3 billion or something, whatever it is. Or shares, I'm not sure what it is.
No, the value of the investment would be a little under $3 billion now. We paid about $400 million.
It's sort of like a typical investment.
No, it isn't typical.
Isn't it? We paid $400, now we're $3. We paid $10 million, is now we're $2 billion.
No, well, believe me, there's some others.
Coca-Cola.
No.
Having said that, though, what you did at the annual meeting was interesting. Some people believe that Berkshire Hathaway should make investments or should divest investments in companies in China, especially in the oil business, because they say China, which buys a huge percentage of its oil in terms of the production of Sudan, and that you could influence the Chinese government if you would make a public statement by disinvesting in China, PetroChina.
PetroChina is 88% owned by the government of China, and the government of China is a big player in the Sudan.
I think they buy 70% of their oil.
They don't buy 70%. They may take 70% of the production of the Sudan. Yeah, okay. But China's going to be buying.
They buy 70% of Sudan's production.
Although the Sudan would sell that oil to somebody else. Right. I mean, oil is a commodity, so you don't know where the oil in your tank comes from. You know, basically when
the point of this story, obviously, is can you, by investments or not investing, influence the conduct of governments? In this case, one of the fastest growing economies in the world.
Yeah, I would say that the odds of anything I do changing the Chinese view of what they do, it's about like if anything I say changes the view of the United States government of doing what I do, or the Omaha City Council. I mean, in the end, you know, it would get a story. You know, Buffett does this and says so and so. But I actually wrote the head of PetroChina about 2 years ago because they were having a small issue of stock, which I didn't think was a good idea. I mean, I thought they should not dilute the stock. It was a small one. And, you know, I got a very nice letter back from them, and they said, you know, we love to have you as a shareholder, and we respect your views, and we're going to issue the stock. And of course they do. I mean, but that happens in the United States. I mean, in the end, the government of China is going to do what they think is in the Chinese interests. And they don't really... The idea that Berkshire Hathaway is selling stock in a subsidiary, Chinese government owns the controlling interest in 32 of the 33 largest publicly owned companies in China.
Say that again.
Of the 33 largest publicly owned companies in China. The Chinese government is the majority holder of 32 of them. I mean, believe me, the Chinese government is they are a strong factor in all major business over there, and they have policies, and it's up to them. They are not going to be swayed by the managements of those companies. They're not going to be swayed by me. They're not going to be swayed by an office. They may not be swayed, for all that matter, by Hank Paulson, although he's very good and they like him. So it would be a futile sort of activity. Now, going beyond that, the Chinese government is a participant with the Sudanese in oil projects over there. If the Chinese government were to divest, they can't take the oil and go home. They can't take the pipelines and go home. They have to sell to somebody. They can sell to one of two people. They can sell to the Sudanese government itself, or they can sell to some other country that wants to be a partner. If they sell to the Sudanese government, they're going to get paid a pittance compared to the value of assets. Sudanese government's going to be better off if they can get them to sell. Right. If they sell to some other entity, my guess is the Sudanese government would renegotiate the terms for even better terms to have the assignment take place. I mean, you can't divest yourself in the sense of taking the assets back. 400,000 barrels a day of oil are going to get produced in the Sudan. They're going to get sold, and frankly, the United States government would be unhappy if they weren't being sold, because that'd be 400,000 barrels of oil less in the supply of the world, and that would, if oil prices would go up, everybody in the United States would pay more for gasoline if they quit producing oil in the Sudan. I mean, it would take a significant amount of production out of the world supply, which is pretty tight now.
Sure.
What's going on in Sudan is absolutely terrible, but the idea that a shareholder of PetroChina is going to change the Chinese government's policy, or that having China leave the Sudan would hurt the Sudanese government, those are very tenuous propositions.
I tell you what looks like it did have an influence on the Chinese government was the Olympics. The Olympics. This is going to be their showcase, and they want to make sure.
They care about the Olympics. Huge.
And so as soon as that began to hit the screen in terms of Darfur, a Chinese member of the Chinese government went to Darfur and said...
The prestige of China, it is... I don't think we can fully understand even, we love having the Olympics here, maybe in Atlanta or something, but it's nothing like how they feel, I'm sure, about having the Olympics in Beijing. So.
Let me talk about philanthropy for a second. In August last year, with great attention, you announced this gift to the Gates Foundation and also four other foundations. Your three children and a foundation named after your late wife, I think. When you look at that now, have you just been reaffirmed? Do you believe it was the right thing? Have further consideration raised any questions for you?
Charlie, I love it. It's exactly what I want to do. I want the money put to good use. I've got these little pieces of paper down in a safe deposit box,
Stock
they're just sitting down there. And now they can translate themselves into vaccines or education or whatever.
Right.
And the real question is how to have it done best. And my kids do a sensational job. Bill and Melinda will do a sensational job. Alan Graber at the Susan Thompson Buffett.
Right.
I mean, it is a chance, and frankly, I love what I'm doing. And if I do it well, they'll have more value to what they do. So it's ideal. There's not one bit of it I would change in any way, shape, or form.
There is this, which is interesting, and you mentioned this in the stockholders' letter. Yeah. A lot of what I know about how you think about business comes from the stockholders' letter. It is your book, as you have frequently said, and Carol Loomis says, and everybody who knows you says. You talk about the notion that if you look at, you're thinking 25 years out, that your lifespan may be, if you look at actuarial tables, another 12, 13 years.
Maybe 10 minutes and maybe 20 years, but it won't be 50 years.
And you also know that in your will it take probably 3 years to settle the will.
Yeah, my lawyer would like it to last longer, but we'll try to.
So essentially, you want all the money to be given away in 25 years.
I want the money to be given away. And go ahead.
Go ahead. You tell me, Ann.
Well, I have made a decision that I've got these terrific people in place to do it. I see they're working on the right things. I know their goals. I don't look at each individual decision at all. But I don't know what the situation would be 50 years from now when it becomes another generation and all that. And I'm a big believer, in betting on what you know about rather than some unknown. So why should I assume that somebody 50 or 60 years from now that I've never seen, may not even be born yet, will do a better job than the people that I know right now and I've actually selected? So the interesting thing about foundations is there's really no market test to them. I mean, most of the things we do in this country, there's a market test to. But with foundations, they go on and on and on. And the good ones go on, the bad ones go on, the ones that are stagnant go on. And I believe in the money getting spent while I know you've got the right people in place working on the right things. And then 50 years from now, there'll be plenty of philanthropic needs and there'll be plenty of very rich people. And if the ones that I've supported now have done a great job, they can make a case to the philanthropists of low time and saying, look at what I did with Buffett's money. I'll do even better with yours. And they could, if they meet that test, they can have people give them money. And if they don't, they go out of existence and somebody else replaces them.
Have Bill and Melinda gotten you more interested in how they use the funds, or do you simply say, I trust them, I want to be informed, but what I love doing is running Berkshire?
The latter. I mean, I'm a big guy on outsourcing. I mean, I didn't deliver my own 3 children. I called an obstetrician, and I do not want to have, some member of my family or fill my teeth or try to do it myself. So if somebody can do a job better than I can, and they can in all kinds of things, they can play the ukulele better than I can, I will have them do it for me. And people have me run their money because they think they'll do a better job than they do. I have these people distributing the money because I think they'll do a better job than I do. And it makes perfect sense in every other field. Why shouldn't it make sense in philanthropy? The one good thing that particularly that's happened since we talked last on this is I've heard from a number of people, not only in this country but outside this country, that they are rethinking, and in some cases they've actually implemented some major changes in their distribution of funds. I've had people tell me they've given away significant amounts of money. They weren't thinking about it at all, but they did think about it.
You have been a stimulus for people to make charitable contributions.
I think so.
Now rather than later.
Yeah. And I've even been a little bit of a stimulus, I think, maybe on this idea that you don't set up the perpetual things. I mean, I've heard from people that way, and I've heard from one fellow, for example, the other day, who's going to put $1 billion in, and I think he will put the $1 billion and
put it into a charitable foundation. Now, how about bringing money to the Gates Foundation?
Well, they've had a number of proposals. Yeah. I think they're going to start accepting some money from outside. I think they were kind of surprised by that. But
Bill and Melinda were.
Bill and Melinda, yeah. And so they rethought the thing. They hadn't ever planned to do that, but I think they're going to do that.
Part of the reason you chose them, A, is friendship, and B, you had great respect for what they had done and how they I'd seen him do it. I mean, if you tell me you're going to play in my place in a golf tournament this year, and you're going to shoot a 69, maybe you will, maybe you won't. But if Taggart tells me that, I hand him the clubs. Do you know anybody that's having more fun than you are? That comes to mind.
I don't think so. Certainly not legally.
You also, though, have been critics of the way you're not thrilled, as you say in the stockholders' letter, or you have some reservations about what you call the 2 and 20 crowd.
Yeah. Well, I don't blame them for, in a sense, for getting what they could get. But the idea that a significant percentage of the investment money in the United States can be run and pay fees of 2 and 20 to managers to do it, and that group can achieve better than average results after those fees, strikes me as just nonsensical. It won't happen. I'm not saying that if a tiny little portion was run by people that had those fees, that group couldn't overperform. But a large sum simply can't overperform. But the managers will do very well, and they'll do very well even if they fall on their face. But
you complain about the fact that they take 2% off the top, whether it does bad or good.
It's very interesting. Some of them would be running mutual funds where they get 0.5%, and with no performance fee, and then they go over to another field and they say, well, we're so good that we deserve a performance fee, but we now need 4 times a 2% minimum fee. Yeah. Otherwise it isn't worth us coming to the office in the morning.
You even suggested 20%. There's a rising tide, and some of them will get 20% just because of that, rather than taking, as I think your deal is with Lou Simpson, you take 10% of something that does better than a certain standard.
That's exactly right. And the idea. Well, it'd be like going out to the racetrack, and a tout giving you touting a different horse to each of 10 people. I mean, he's going to get a winner. Well, if you set up a partnership in each of 10 years going out and you get 2 and 20, there's going to be 3 or 4 years there where an orangutan would have made 25%, and then you get a big fee, and then the losses come, and the guy says, well, too bad, now we'll start another partnership.
But somebody must love them because the money is just flowing into them from pension funds and everywhere else.
Yeah, well, so I had a brother-in-law down in the stockyards in Omaha, and I said, what do you tell these farmers when they come in? You can sell their pigs, the other guy can sell their pigs. He says, Warren, it isn't how you sell them, it's how you tell them.
There's wisdom in the stockyards,
yeah, right.
Is there not? There are now 19 people at the headquarters of Berkshire Hathaway.
Yeah, we've gone crazy.
Yeah,
shows you what's happening when the boss is away.
19 people.
Yeah.
What are they doing?
Well, we have these 73 operating businesses. Our federal tax return was over 10,000 pages last year. Well, that gets done in our office. We've got state income tax returns. We've got foreign returns. We've got SEC matters. So we have a fair number of people in accounting, but we don't have a human relations officer. We don't have investor relations. We don't have public relations. We don't have all kinds of things like that. But there's a certain amount, just in being a large public company, we get pretty busy around quarter-end times.
This question leads to this question. You're doing the fact that you have built this up over 42 years as CEO of Berkshire Hathaway. Most of that, almost all of that, was one man reading a lot, talking a lot on the telephone, meeting a lot of people, and making decisions for the long term.
And getting a lot of people out running a business.
Yeah, sure. That was part of buying the businesses. You invested in businesses and you bought businesses that you believed in the people running.
Right.
But there's one man in Omaha. I mean, this is extraordinary, I think, making these decisions out of passion, out of love, out of knowledge, out of principles, out of an architecture of analysis.
I just got to paint my own painting. I mean, I just sit there, keep painting, and it'll never be done. And I enjoy watching this canvas get larger and larger. But it isn't hard work. I mean, if any shareholders are listening, I'd like to tell them, I'm bathed in sweat at the end of the day or something. But it just isn't hard work. I play bridge every night. You could make it hard work. We could have that whole building filled with divisions reporting to each other, and I could have lots of data coming in, on time sales of how many boxes of peanut brittle did we sell at See's Candy yesterday. And I get a lot of figures, and they're the important ones, but there could be all kinds of make work stuff. We don't have any committees. I mean, if we had committees, we'd be talking about 75 people. Then we'd have other committees that were liaisons between the committees, and then they'd be going to conferences and reporting back to the others what they learned. I mean, it just goes on endlessly. We don't have any of that.
What was it Ronald Reagan said about work?
Yeah, well, Ronald Reagan said, he said, they tell me that hard work never kills anybody, but he said, I feel, why take the chance?
There is also this, as I mentioned, you have married again to Astrid Minks, who's brought what to you?
Oh, she takes care of me. I mean, it's terrific. I lived with her a long time, and Astrid you couldn't find a better person in the world. No, my life is, I've been charmed.
Thank you.
Thank you, Charlie.
Pleasure to have you here. Pleasure to be your friend.
Thank you.
Thank you. Warren Buffett. Thank you.
Watch this on American Idol.